Davos. Joining me is TV Narendran of Tata Steel. Thank you very much for joining us
My
on
pleasure.
CNBC TV 18. What does the outlook look like as far as your sector is concerned in 2017? Do you anticipate a pickup in demand in 2017?
Globally or in India?
In India specifically.
In India, certainly we expect 2017 to be better than 2016. In fact, the second half of 2016, things started improving. And we expect with the government's focus on infrastructure expenditure and hopefully a lot more coming in the budget, we expect that the sector construction in India will pick up. We will ride over the challenges of the last couple of months on demonetization. So I expect
How much
2017.
has demonetization impacted business for you so far?
Directly for Tata Steel, not much, because a lot of our business, or almost all of our business, was on electronic transactions anyways. It was just the final leg of the retailer to consumer in our distribution business which got impacted. Got impacted in November. We worked with the State Bank of India to provide some 10,000 point of sale stations in India with our distribution network. So we got over that. Some of our customers, the auto industry for instance, got affected. But I think they're also getting out of that. So I think the effect is temporary and the gain should be more permanent, I guess.
So can you quantify for us when you say that it's expected to be a better year, 2017 versus the previous year? In terms of demand, can you quantify the kind of uptick that you anticipate?
Typically in a developing country, the demand growth in steel should mirror the GDP growth. In India, it's been a bit lower because it's been a consumption-led growth rather than an investment-led growth. This year, the expectation is 5 to 6%. Next year, we expect it to be at least that, if not more.
The government intervened by way of safeguard duties and the MIP and so on and so forth. That provided the much-needed protection that the Indian steel industry was looking for. But globally now, as you look at what's happening in China, what is the sense that you get? And the other markets that you operate in as well, what's the outlook, for instance, in Southeast Asia and for exports?
These actions by the government of India was very timely and helpful in the early part of 2016 because we were coming out of 2015 where the steel prices had dropped very significantly and exports from some of the countries had grown. That did help us. That gave us the support. That gave us some comfort for a few months. But international prices started picking up, and that is reflected in the fact that India is now back to being a big exporter of steel, and you wouldn't be able to export steel if you were not competitively priced. So the rising coking coal and iron ore prices and the rising international prices, both of which are correlated, helped change the price equation totally. So the MIP, while it helped us for a few months, the international prices went above the MIP and Indian steel producers started exporting. So I think we are back to a more normal playing field and
so what
we
is the
appreciate...
outlook then in terms of exports?
In terms of exports, well, India is already exporting, I think, about 800,000 tons a month. India is going to be a net exporter of steel, which is good, rightly so, because India has the raw materials, very efficient producer, so why not? In terms of global markets, last year, I think, if I look at 2016, China and Russia were not as bad as we thought it would be. I'm not saying that the steel consumption grew there, but it did not shrink as much as the World Steel Association had anticipated. The US was a bit of a disappointment in 2016. Going forward, next year, we expect the trend to continue in China and Russia. Things are improving. I just came out of a session where I was told the Chinese government is going to spend a lot on infrastructure, which is good for steel. They are also closing down on a lot of inefficient capacities because of concerns on pollution. The US, Trump has promised $1 trillion of investments in infrastructure. I don't know how much of that will happen. But overall, everyone's bullish about the prospects in the US, which is also a big steel consuming market. Europe, things are improving, but Europe is still lagging behind what it was in 2008. So it's still got some distance to go. Southeast Asia, after India, is the most exciting geography as far as steel consumption is concerned. It almost consumes as much of steel as India does and is also growing at 5 to 6%.
Since you talked about Europe, let me put in the Europe question as far as Tata Steel is concerned. What is the latest now, whether it's ThyssenKrupp or the conversations with the UK government on pension liabilities? Where do things currently stand? I know it's not entirely your remit, but give us a sense of what we should expect.
Yeah, I think as you rightly said, probably Kaushik or Hans are the better guys to answer that. But the conversations are going on with the British government. The British pension is an important part of the conversation. The discussions with Thyssen are also going on. UK is a very important part of the Thyssen discussions. So let's see. We are hopeful that in the next few months we'll find some solutions.
So it will still take another few months?
It should.
So is that 2, 3, 6?
I wouldn't comment on that.
You wouldn't comment on that.
Too many moving parts.
And I don't want to get into the details of what is transpired post the 24th of October. The only reason I intend to talk to you about it is because operating companies were in that sense dragged into the bitter boardroom battle. Tata Steel was one of them, where the former chairman has said that certain strategic decisions were not right for the company, that it's in a sense weighed on growth for the company. What has this meant for you within Tata Steel? How are you addressing some of the questions that have been raised, not just by Cyrus Mistry, but also people like Nasli Vadia?
I wouldn't want to comment on what happened inside the boardroom. I think what I would just say is that as a company, we stuck to what we were supposed to do. I think Mr. Tata, when he spoke to us the day after the event, told the managements of companies to focus on the businesses and make sure that the businesses went on as normal. And I think that's what we did as Tata Steel. The team rallied around and we continued to do what we were supposed to do. And the least number of people who needed to be distracted by this were distracted, and most of the people continued life as normal.
Well, one of the issues that was raised there, and of course that had more to do with the Chorus acquisition, is that the focus ought to have been more on the domestic markets because India is the growth story as opposed to international. As you look ahead, and given the fact that we are now seeing the economy is slowed, but it's still 6.5% or perhaps 7%. Do you believe that the strategic focus ought to be on the domestic business?
Well, for any business, you would tend to focus on where you make most of your money. The Indian business is one of the best placed globally from a competitiveness point of view. It's one of the most profitable businesses in the steel industry in the world. So rightly so, you would focus on it. And I think the Tata Steel board has focused on it. If you look at it between 2007 and 2015, the capacity in India grew from something like 6 million tons to now it is 13 million tons. So it's more than double. So we've invested something like 45,000 crores in India in growing capacity. So we are a 13 million ton player in India. And, so I think we have not, in some sense, we've not been denied any investments. I think as long as there was a business case for it, we should also remember that post 2008 things were looking bad for everyone across the world, right? So I think we went ahead with our investments. What slowed us down in Kalinganagar was less to do with the capital available, as to do with issues on the ground, which we sorted out. And as soon as we sorted out those issues, we built capacity very fast. So I think we will continue to invest and grow in India. In fact, we had actually made a lot of announcements in the mid-2000, between 2003 and 2005 about investing and growing in India. But I think in India, particularly if you're looking at greenfield sites, it takes some time. It's not easy. It's not just about starting construction when you want to, but about building equity with local communities. That takes time. And that's what we did in Kalinganagar. So it took us a while, but now we are set for, between Kalinganagar and Jamshedpur, we have the land and the facilities to be able to grow much more.
So you don't need to add any more capacity. What can we then expect as far as investment?
We will, I think as long as there's a business case for it, we will continue to look at growing capacity in India.
So what kind of investments are we then talking about?
So it again depends. We've said already that we're going to go aboard in the next few months with a proposal to take Kalinganagar from the current 3 million to 8 million. But that's subject to the board. Well, if we get the board to agree to the proposal in the next few months, then it's 3 to 4 years from now.
Okay.
Yeah.
And what would that entail in terms of incremental investments?
Incremental investments, would be less than what we spent in the first phase, because in the first phase we had to build a lot of enabling facilities, a lot of the investments in building the infrastructure around the plant. So it would be much less. I wouldn't want to give you a number just now, but a thumb rule typically for any steel investment is $1 billion a million tons. This would be less than that.
Okay. What is the pricing outlook? Because you were just talking about how we've actually seen prices move up. As you look forward to 2017, what is the sense that you get in terms of prices and where they head?
Well, what has happened in the second half of 2016 is iron ore and coal prices went up much more than anyone ever anticipated. Since then, the coal prices have dropped off a bit. Iron ore prices are still holding strong. But even at today's coal prices and today's iron ore prices, I think there's a disconnect between the steel price and the input prices. So I would say at today's coal and iron ore prices, steel price should at least be $50 higher. To come to a balance. If you look at a long-term balance. So let's see which way, whether the raw material prices come down or the steel prices go up. It will be decided by the market.
What about inorganic opportunities in India? Is that something that you are looking at actively, would look at actively in the future? There's a bunch of NMDC assets that I understand are on the block. Anything there?
Yes, I mean, in the sense, when there are opportunities that come our way, we look at it. And We will evaluate each opportunity based on its viability and things like that. We are not close to inorganic growth opportunities in India.
But is that something you're actively looking at today?
I don't think there are too many great assets to look at, So some of those assets, like recently we talked about BRPL, the pellet plant in next to Kalinganagar, that seemed a good, interesting asset which was available. We looked at it, and we've signed an agreement with them, and we're trying to close a deal. That will bring us greater cost efficiencies in Kalinganagar. So it could be focused on top line or bottom line, but we are always open to inorganic growth opportunities if they are good.
Okay, so let me then ask you as to what you see as the key risks for your business specifically. I mean, the global uncertainties you don't really have much control over, but what are the levers that you can exercise to mitigate that? What can you do? For instance, as far as further cost reduction is concerned, what can we expect for 2017 in terms of key levers that you intend to exercise?
Cost reduction is, the way we work on a daily basis. Tata Steel has always had a very strong culture of continuous improvement and cost reductions and KPI improvements. So that goes on. But I think what we are looking at beyond that is also to look at how can we leverage digital technologies to, enhance the stakeholder experience with Tata Steel and also drive cost efficiencies to another level. I think there are a lot of opportunities there. Davos is talking a lot about digital transformation. Tata Steel is also a year and a half into a digital transformation journey. And I think there's a lot we can do there. So that's, to me, something we do. We are doing a lot of work on services and solutions. We have a very strong B2C business, which is 20% of our revenues in India. I think we are fairly unique and pioneering in this work across the world. We are now doing a lot of work on solutions, services and solutions. Today, it's about 2% of our revenues. We want to take it to about 20% of our revenues over the next few years. So we want to take the B2C business to 30% of our revenues. We want to, apart from the automotive industry where we have a strong presence, we want to build equity with the oil and gas industry from our Kalinganagar plant. So multiple initiatives in the front end and in the back end which are going on.
Well, speaking of transformations, you've got a big one within the Tatas, with Chandra now moving to the chairman's position at Tata Sons. Is it fair to assume that he will take over as chairman of Tata Steel as well?
He's joined the board of Tata Steel just now, and the board of Tata Steel is meeting in the first week of February, and the board of Tata Steel will decide.
Mr. Narendran, always a pleasure speaking with you. Thank you very much for your time,
Nice
and we wish you the very best of luck for 2017. With that, it is time for us to wrap up this CNBC